For that, again, accountants like to attach expenses to the period in which revenue was recognized. Okay? There is something called matching principle. Certain things are not in cost of revenue. For example, I pay my CEO $500,000 a year. That is not part of cost of revenue, because I'm going to pay that CEO that money, whether or not I sell the phone to them or the school. The kind of things like overhead, the rent for the building. But, those 13-year-old kids somewhere in China who puts together Apple phones, they get paid about $2 an hour. That is the cost of revenue, because I spend that money in order to build that phone that I just sold. Things like, obviously, cost of the material that you use to make that sale. Unfortunately, depreciation is also one of them. Even though it is not a cash expense, it will be part of cost of revenue. When we're doing exercises for quiz purposes, we actually make a distinction between the two. So most problems are going to tell you the revenue is the cost depreciation. If you really want to think about cost of goods sold or cost of revenue, you're going to add depreciation and cost. But why am I? Oh, I thought I turned it off. Man, mortgage market must be really. I'm a co-signer to a mortgage my ex has in California. He got it at 287 in August 2021. If I got that now, I probably would have to pay over 8. They keep saying, "Oh, you have so much equity. Why don't you refinance?" No, thank you. or they say, "Why don't you take that equity and do something with it?" Again, no, thank you. But they're interested in that number called gross profit. And a lot of times we take that gross profit and we express it as a percent of revenue that has a special name. Who knows what that is? I'm going to actually insert a line, and I'm going to calculate that percentage. That's a formatting issue, because default format is just showing whole numbers. I'm gonna make that into percent, and I like 2 digits on that. And I make that red and white, and the colors of the flag of España. All right. Anybody knows what that number is called? Again, it's okay if you don't know. It's called gross margin. Not Megan, margin. And I'm gonna like that black and white. It basically says for every $100 of sales NVIDIA makes, it gets to keep about $57 before we start worrying about other expenses. Okay? Those other expenses are called operating expenses. Things you have to spend just to run the company, even if you don't sell it. Research and development is one of them. Again, we're gonna figure out that that number is not probably $7 billion, even though NVIDIA does actually do a lot of R&D, sales, general and administrative. The money you pay the salaried employees and the CEO. Sales, these are expenses you make to make the sales. Advertisement, promotions, and that sort of stuff. this is kind of stuff that's not related to sales. They probably acquired something, some right, and they have to pay something to terminate that. And we're not gonna look at the total operating expenses, but I'm interested in income from operations. That's basically gross profit minus total operating expenses. In a lot of times, we're gonna look at the gross margin. Oh, I'm sorry, the operating margin. Income from operations divided by total revenue. Again, for each $100, they get to keep about $16 before they have to worry about any interest, taxes, and non-recurring stuff. That number is important. Again, I want to know how that behaves over time. It looks like there's, gross margin is coming down a little bit. And operating margin, I don't know why. Oh. Yeah, R&D was just way too big in 2023. More than likely, that's a lot of stock-based compensation expense, which we're going to see. Obviously, you have the net income. And I got about 10 minutes. Let me briefly talk about statement of cash flows. Then next week, we're going to basically spend a lot of time doing problems, understanding stuff, and look at the actual cash flow concepts. Finance people look at it. So I always have a joke with my accounting professor friends. Whenever there's something, I say, "Oh, it's just accounting. Don't worry about it. It's too simple." Basically, the accountants give us the statements. We actually make them talk. And right here, 2.7 in stock-based compensation expense. In this case, cash flow from operations. Where is it? This is net cash provided in investing activities. These are basically if you sold your securities a lot more than you bought them, you're going to have positive contribution from investing activities. Same thing in financing. Net cash provided or used in financing activities. If you borrowed a lot more than you repay, that's going to be positive. This means this company actually repaid a lot of debt. They're making a lot of money. And the rest is net cash provided by operating activities. That's essentially net income corrected for kind of accruals. All right. And you can also read off the depreciation right there. We call it depreciation and amortization for two reasons. There are certain assets that they're not written off by standard depreciation rules. For example, there is something called depletion. If you actually have a natural resource, let's say you own an oil well, and the proven reserve is 1 million barrels. And if that year you extracted only 500,000, half a million, you only use 5% of that. So you write off 5% of the cost, the depletion cost. But if you took out half of it, then you're going to write off half of it. Certain vehicles, you kind of prorate it. If I have a truck that I use in my business and I view its tax life as 100,000 miles. And if I drove that truck 30,000 miles that year, I'm gonna write 30% off. But most assets are based on the maker's depreciation, which is short for modified accelerated cost recovery system. We'll have more to say about that when we're dealing with capital budgeting. But for now, you know that you can figure out depreciation from the statement of cash flows. And if indeed these guys had paid any dividends, and they did, you figure out what the dividends were from the statement of cash flow. Because we're gonna need those numbers when we're making calculations on cash flow, things like cash flow from assets, which is another name for free cash flow of the firm, cash flow to shareholders, and cash flow to creditors. Let's stop here today. On Tuesday, again, please come to class. Having read chapter 2, we will do a lot of examples and problems. This is the section where we have exams, right? Yeah. Remember, as soon as we're done with chapter 3, exam will come.